Welcome to this quarter's video from our development land division. We're going to chat about the lessons we learned from last quarter, what we expect to see over the quarter coming up, and of course, our billboard, the big idea. So let's kick it off with lessons. Last quarter, it became really apparent to me how much the market weights the last month, maybe two at the most, of activity and sentiment in driving how they view the next year or two going. So we had 3 or 4 weeks where the market just went bananas and everybody was super stoked on where the market was going to go for the next year or two. And then it happens the other way around. 3 or 4 weeks of deceleration, not even bad news, just deceleration. And the sentiment flips. And now the next year or two is looking way less rosy, which just seems crazy to me. And really, any site that they're buying isn't going to be brought to market if it's raw land for 3 or 4 years probably anyways. Anyways, that was a big lesson for me last quarter. Adam, how about you?
Yeah, I would agree. I think that certainly the media and the news cycle does weigh heavily on what's going on, both for buyers and seller sentiments in our market. Absolutely, probably to everybody's detriment, to be quite honest with you. I really do think that there's an element of both bandwagoning when things are going good on particular product types and locations, but also chicken little when things start to slow down, whether that's just a natural phase of the market that we're in or if it's seasonality. And that's one of the things I really learned last quarter is how important it is to stay true to your thesis in what you do and understand that as a developer, you have a basket of goods that you're offering, right? And you should have, some splashier, sexier, more exciting type options in the basket, but you should also have your milk, eggs, and bread, right? Your all-weather housing. So your mid-market wood frame condo next to a SkyTrain station, your slap-on-grade site in a nice suburban location, things like that, right? Some single-family stuff if that's your jam too. And just know that everything goes in waves and phases. So, you've been around longer than all of us. I'm sure you've seen a few of these cycles, but that's
and one of the questions that I always ask myself during that is would I have wanted to do the deal that I'm looking at today 5 years ago? And I think that in almost any environment, given a long enough time horizon, which all of these projects take a lot of time, anywhere from 2 to 5 years plus, you look back in the rearview mirror and you say, geez, I really wish I'd pulled the trigger on that deal, or I'd bought that unit or invested in that real estate. And building a little bit on one of the long-term themes in Vancouver real estate is the unaffordability of our market, but even that's starting to shift. So as we're starting to come out of a pandemic, the adoption of new technologies and new ways of doing things starts to accelerate, and Vancouver is a city that's poised really well for that. The Financial Times published a report recently about foreign direct investment into large and important cities. And Vancouver, in the large category, which includes San Francisco and Seattle and a few others, actually came out as, surprisingly to me, the number one overall pick. And that was primarily based on the amount of foreign direct investment that tech companies are making into Vancouver. And the really important thing about that for the housing market is that this drives much higher wages. So the average tech employee is making between 50 and 100% more than the median wage in Vancouver. And so when we look at downtown, all of the office space being taken up, all of the new projects, these are people that are going to be able to afford these, very high and increasing prices in Vancouver, whether it's for rental product or product for sale.
It's certainly become very evident to me operating out in the market that a good development site is a lot less common than cash. And it's only that dynamic is only going to keep accelerating, I think, in the near term here. Because the money is, and at the end of the day, it's better off in the land than it is in your bank account, right?
So how does that tie into the future for making recommendations to our clients, Adam?
Well,
from your perspective?
I think that's really a good place to bring up our billboard for this quarter, which is cash is trash.
Clients are realizing how painful this inflation is going to be, and their requests are flooding in for really, it's a really unspecific request. It's bring me as many sites as you can, I'll buy them all. 3 or 4 townhouse sites. It doesn't, Surrey, Langley, Maple Ridge, Abbotsford, it doesn't really matter where it is, I'll take down all of them. And the other thing that shifted in the last couple of months is the request for long land. So land that doesn't have a neighborhood plan yet, and it's 7 to 10 years away from development, because it's better to have it somewhere than to have it in the bank melting. So what should we be watching for moving forward over the next quarter?
So I think you're spot on. If you have the opportunity to take down some A+ real estate, you know, and it's within your wheelhouse and it's exactly what you do, don't fret over the extra $5 to $10 available. You're not going to remember that in 4 years anyways, right? You are going to remember that you have an awesome development site, right?
By the time the city even gets around to giving you the
Exactly.
approvals and
Yes.
you're able to take it to market, we're certainly going to be in a different economic cycle by then.
As we come out of the recent peak between November and April, especially in the Fraser Valley, is to watch for something that most of us have a tendency to look at the peak of a market and then see any deceleration after as a negative event and an indication of where things are going long term. When really statistically, when you see an extreme like that, you're going to see a reversion to the mean almost every single time after it. So don't get too concerned about some deceleration. Really, it should, statistically.
Yeah, zoom out to the macro
Exactly.
at the end of the day.
And it's going to get compounded by the regular seasonality of the summer market as we roll into Q3. The stats are always low. So we're going to get a combination of both a reversion off of the peak and the summer stats. But it shouldn't take long for it to pick back up again. I was working through some of the absorption data with Michael Ferrer's team at Urban Analytics and watching the peaks and comparing them to 2016, and for some of the data in some of the really stable markets like townhouses in Langley, for example, which is just the staple product, the absorption matched 2016, and it has come down to what we would normally see as a 5-year average plus a bit.
Now, if you have the time and if you have the energy, I think it's a great time to go shopping,
Yeah.
both for end product and
Yeah.
potentially for some developments. We're still not seeing a huge availability of sites. You know,
No.
certainly nothing like it was. Even I guess it's a bit longer than that now, but early last year.
Yeah.
And I think that, you know, potentially some of those will come back to market. They'll get dropped or whatever the case may be, right? But right now, it's I don't want to call it slim pickings, but it's not much better than slim pickings.
That's literally the phrase that I've been using the last
Yeah.
3 weeks.
Yeah.
It actually is. Developers calling me disappointed that I'm not calling them with sites.
Yeah.
And I'm not calling them because I don't want to talk to them
Yeah.
or I forgot about them. There's actually nothing to call about.
Yeah.
So don't give up on the one you did find.
Exactly.